Live.
Newton witnessed an apple falling and discovered gravity. Ruth Graves tried to bake a cake and accidentally discovered chocolate chips. Tracy Chapman was busking her way to her big break. We all wish for one opportunity, one unexpected chance to succeed, one rare possibility to change our lives forever. We can't all wait for an apple to fall, but we all want to be in the right place at the right time, where opportunities are carefully suggested and possibilities are available to all. INX1, Wealth of Investment Opportunities.
Welcome, ladies and gentlemen, boys and girls, to the show. We have in our midst tokenization legends from across the world, mostly the Mediterranean and the US. Wendi and Kyle, Brian, Samuel, and my special guest all the way from Cyprus, who's right here with me in the meat space, Bob Ejodame. And we will be talking today about Tokenization's killer app, and just to set the ground for kind of what do I mean by that. You know, we look at, you know, if you see the Web3 space and, you know, try and understand what came before us in terms of trends. You had ICOs and DeFi and NFTs, and tokenization is then, you know, shaping up to be the next narrative. And the question is, what's going to be the tipping point for tokenization? Like, you know, DeFi had Uniswap. Before Uniswap, there were all these protocols that did what DeFi does, but they weren't really called DeFi. The term was only coined later on. They didn't have nearly the same volume, excitement, adventure as DeFi did post Uniswap. NFTs had the Bored Ape Yacht Club. Again, NFTs have been around since colored coins, since, you know, early days in Bitcoin, and they never really caught on until the Bored Ape Yacht Club came around, and to give like some exclusive membership around their NFT. So what is that killer app for tokenization? What's going to bring the next billion people to hold tokenized assets, tokenized securities, real world assets on the blockchain? And we have the best people to ask that question, because each one of you come from varying fields. You all touch and intersect every other field. So hopefully together we can come up with some sort of an answer. And without further ado, I would like to ask us to, you know, introduce yourself, go around and tell us a little bit about what brought you into this wild, wonderful world of tokenization. Wendi, we'll start with you.
So good morning. Thanks, David. So Wendi Carver, I am the Chief Operating Officer at BankWyse. My background is in capital markets, so traditional finance. I originally was in equities, equity derivatives trading, ran equity derivatives trading desks, and fast forward to commodities, launched commodities hedge funds, ran commodities trading desks, and this led me to seeing shortfall in technology, right? So the commodities platforms are very antiquated, and they needed an upgrade. Had the opportunity to launch a tokenization platform and marketplace in the commodities space. Incredible technology enabling things that were completely unable before, and that led me to see that what we're missing in the tokenization universe here in this economy is we're missing banking, we're missing custody. There's fundamental infrastructure that's needed to elevate this economy. So BankWyse is a Wyoming special purpose depository institution. It is a state chartered bank which has the ability to commercially bank digital asset companies, the whole digital asset economy, as well as provide qualified custody and the integration of that. So the Wyoming Speedy itself has the full regulatory framework around digital assets. It's got 26 statutes. It has a 700-page examination manual for every single aspect of digital assets, for the operations, for the technology, for the finance, for the audit, governance, full-blown regulatory framework that's needed to be able to elevate this economy. And so we are taking commercial banking, ex-lending, so it's safe, it's custody banking, integrated with that qualified custody to enable that on-off ramp, A, and B, to elevate the economy. And that's our main objective here.
That's cool. Wyoming's very own crypto bank. Kyle, welcome to the show.
Hey, it's great to see you all again. Thanks for everybody for tuning in. My name is Kyle Sonlin. I am the CEO of Security Token Market, STM.co. We are kind of the Bloomberg of the tokenized securities industry. We track everything going on in the markets from a trading perspective. We also have a lot of media and content. We drive a lot of the adoption. We spread the gospel of tokenization through our news show, the Security Token Show, every week. And I'm really passionate about the industry, about the technology, and what that means for the greater economy in capital markets and its intersection with technology. So really excited to be here. Have a great cast and crew here to talk today, and really appreciate INX for having me.
Cool. And Samuel Grossman, you're up next.
I'm Samuel Grossman. David, thank you for having me. Kyle, always a pleasure. Wendi, Brian, look forward to talking now that we've met each other. I'm founder and CEO of Fairchild Acquisitions, a real estate development company. In the last 3 years, I got involved in Invenium and dove into this whole world of blockchain, Web3, real estate, and oh yeah, by the way, tokenization. It had me at liquidity optionality. That's sort of what caught my ear. Invenium, I'm the managing director of real estate solutions. Invenium is a data operating system for private market assets. It's kind of a fancy name for the pipes of the ecosystem. We handle the data, and we link in with other groups, hopefully eventually like BankWyse, to handle the distribution, and other ATSs out there that will handle the transactions on the issuing and distribution of the tokens themselves. But Invenium just handles the data. We push it and pull it and credential it and verify it. And in this world, transparency is key, and we provide that transparency. So look forward to talking more, and that's all I got.
Thank you, Samuel. Data is everything. Data is the new oil, as they say. But oil isn't in fashion, so maybe we should say data is the new lithium ion. I don't know anymore, but we'll move on to Brian Esposito. How are you?
Hey, David. Good. How are you guys doing today? That's a real honor and pleasure to be sitting with you all. Kyle, always great to share a stage with you, pal. Thank you for everything. And Wendi, Sam, great to meet you guys as well. Brian Esposito, CEO and founder of Esposito Intellectual Enterprises. It's a holding company I've built over 20 years of my professional career. Currently, there's 108 companies in my holdings. There's over 200 joint ventures, and proudly operating in over 25 different industries. My entire career has been adapt or die, continue to push forward on building new technologies and where the future is going, and how do you play properly and in a regulated environment in that future. So as far as digital assets, NFTs, crypto, and tokenization, been in it since the beginning, but under the terms of my holdings, not as a speculator as to what's going to go up or down, as to how do we use these technologies and these new mediums for assets inside of my company holdings. How do we build communities? How do we add a new asset class inside of our holdings that you can leverage, that can have earnings? So everything that I do and try to build is always in my mind, and Wendi, you'll get this, is boosting balance sheets and companies that are properly valued off of a multiplier of your positive earnings. It's very boring old school methodologies that I try to build, but if you want to be in business, you gotta have revenues, and if you want to stay in business, you got to be profitable. Simple as that. After many years of understanding where this market's going, a firm believer in security tokens is the proper future of legitimizing this industry and protecting the investor. That's why I'm honored to have met and worked with Kyle and getting that messaging out there through his incredible platform and media distribution outlet. And then working with David, Bob, and their team at INX has been a complete pleasure and honor. And Wendi and Sam, hopefully we'll get to do some great work together as well.
Thank you, Brian. Sounds super exhilarating. And last but not least, our very own special Bob Ejodame.
Hey guys, lovely to share this panel with you all. I was chatting with David a couple of weeks ago, and I said, hey, I'm thinking about flying out to Tel Aviv, and he said, oh, come on the 4th of June because we had this thing last night, this event here, and plus this together. So we actually get to do this physically in the same location, which is cool. INX is 6 years old now, and the first 3 years of that were literally spent in the dark, like just working to get approval from the SEC to run an IPO on the blockchain. It was new, it was novel at the time. This was during the ICO bubble of 2017 and around that time. And so we know firsthand what it takes to for the regulatory side of things to kind of move to a point where business can thrive in that space. Once we got that approval and ran that IPO, we then, with the proceeds, and we did very well with that, we raised 85 million from retail investors around the world. We then proceeded to acquire licenses, which is another big, undertaking. And you're talking, broker dealer, a transfer agent license, an ATS. We're up to 45 money transmitter licenses now, which are, individual state licenses. Each of these states can have varying requirements. And then we built the technology, the platform, and we merged the solution we acquired from, a different platform into ours. We've gone through a real engrossing journey, I should say, of the entire regulatory compliant technology, operational, experience to get to where we are now. And where we're now is we have a platform that's ready, provides regulatory guardrails, has strong technology, strong security, strong operational capabilities. And we are now offering a pathway to companies to do basically what we did, which is raise money from retail investors around the world, and do that under the auspices of the US SEC. And INX is accessible in 61 countries on a reverse solicitation basis. So we've really created this, call it a platform, for businesses to come in and raise capital and focus on growing their businesses while we kind of take care of a lot of the rest. So we're incredibly proud of this. And we now need to share this message out there that the platforms like this exist and opportunities to raise capital in this way exist, and bring in a robust pipeline of issuers through the door. So personally, my role at INX is to bring in that pipeline. I'm the head of capital markets here. It's very exciting, very engaging. There's so many businesses out there that want to do this. And so, yeah, I look forward to being an integral part of the evolution of this space.
Thank you, Bob. And we're just getting started. The evolution, it's still an embryo. We're going to evolve it out of the cocoon phase into a beautiful butterfly. But what kind of butterfly will that be? And I want to start with Kyle for the first question, because, we were all circulating around a report that Security Token Market put out about Q1 in the tokenization space. Gave it a good read, and I didn't even use ChatGPT to cheat and summarize. I did it. I read it cover to cover, and a lot of the highlights from around the space that stuck out to me had a very institutional flavor to them. And another data point that I can bring to this end is a dashboard on Dune Analytics. I'll share that in the recording or on social, where that shows the whole public securities market is around tokenized public securities around 200 million. And 98% of that is tokenized treasuries. So it seems to be that there's a much more institutional bent to this tokenization space, as opposed to what we call crypto, which is more retail dominated. So how do you guys see the interplay, the balance of power, so to speak? I mean, we're all on the same team, but the balance of power between the institutional side and the retail side in the tokenization space?
Yeah, it's a really, really great question. And I'm happy you brought up the research that we just put out. We actually did just officially publicly launch our new Q1 2023 extended report, really breaking down all of the institutional developments in the industry. Because to your point, that's where we're seeing most of the activity today. Want to shout out Peter Gaffney, who's the author of that report on our team. He's done an unbelievable job in building a lot of those commercial and institutional relationships. And I do want to give you actually an exponential fact check. That 200 million number that we see from Dune Analytics keeps pumping out is great. And I think that those are fascinating tokenized assets, but we're tracking about 20 billion or so in additional assets that are existing in tokenized, nearly 10 billion in institutional debt that we can track between the APAC region, the Middle East, Europe, as well as the United States. You're seeing billions of dollars in intermarket repo trades. You're seeing so much volume from tokenized deposits and intrabank transfers through money markets. That's where a lot of the adoption is coming from today, mostly because these banks are already leveraging a lot of these different liquidity tools. This is just a way to automate those processes, which brings down the cost for them pretty significantly. That when you're talking about billions or tens or hundreds of billions of dollars in transactions, saving 1%, 2%, 3% is a serious amount of money that they can capitalize on. And I think that in closed financial economic systems is where you're seeing most of the adoption right now, because of the fact that you need all the different vendors along the way to embrace the technology, or else you don't see a lot of the benefits. And so I see Wendi is in full alignment with this. So I'm excited to hear her thoughts on this stuff. But we're seeing mostly institutional adoption, I think, because of that scale component, which we just haven't yet seen on the retail side. I think that retail offers an interesting distribution channel and potentially an interesting opportunity to get access to new things. I think bringing down the barriers to entry by reducing the minimums that a qualified investor needs to have in order to participate. We see a lot of these feeder funds, a lot of these more institutional products are able to drop their investment minimums from $1-2 million down to $10,000-15,000, which I think is definitely more of a retail style of offering, despite the fact that that's probably not the sexiest deal for the average crypto trader. But I do think that there's probably different levels to the term retail in general. And so I think that at least in the short term, we've seen a lot of institutional adoption because they can bring the liquidity that we just haven't yet seen on that retail secondary market. Wendi, what are you?
Yeah, Kyle, spot on. So, well, the key is the technology, right? So this technology has massive advantage, especially for the big players, for the institutional marketplace, right? So what you've got is speed of execution, right? If you can have essentially instant settlement, you are eliminating risk. This risk mitigation is humongous, especially credit risk, right? And what you've got is cost savings. If you look at trading desks, so you're talking about the institutional environment, right? And you've got trading desks. The trading desks themselves are quite small, but the back office is humongous. The cost savings to the large institutions of tokenizing these products, fixed income for starters, is the easiest one to get done. It's a mass of what they do to begin with, and to take that and put it on chain to create the platform using this technology is humongously advantageous. It's effective, it's automated, it's got that speed, and the mitigation of risk along with the cost savings is tremendous. So what's happening there is that they can, in a closed environment, put this on chain, which is keeping it institutional only for now. But with the more mass adoption, and as it spreads, and you have your INX and your Invenium and all of these different platforms who are able to, with, as you mentioned, all of those all those vendors. There's so many different pieces that need to be in place, that need to be implemented to bring this in a regulatory fashion to the broader marketplace. Once we get those all connected and we all do it in a regulatory appealing fashion, like, so it's, if the regulators can see it as adoptable, if we implement the principles that the regulators are looking for. You keep the customers safe. You're not, segregated. You can't commingle accounts. If we can implement risk management, AML compliance policies, which the regulators can get their hands around and their heads around, and remove that fear, they'll see that the technology is employable, that we are able to create the adoption, and it will become a broader marketplace. It will be institutional first and then spread, I think, to retail after that.
Just if I could just a few points on that. Wendy, you had me for about 50% of that statement. When you started going down that rabbit hole of let's build it for regulation and hope that they can get aboard, you kind of lost me a little bit. Not that I'm not all for regulation, I am. But what we need to understand is the pieces are in place right now. And if we wait as an ecosystem until the regulators accept it or get on board, this might never happen. So I am all for regulation and for doing things the right way the first time. But having said that, I think it's our responsibility as part of this ecosystem, right? It's the only ecosystem out there that truly is a stay in your lane ecosystem, as I like to say, in that we've all accepted the fact that Invenium's going to do what Invenium does best. We're not going to do what INX does. We're not going to do what BankWyse does, and we're definitely not going to do what Kyle does, which is probably the best media outlet for this entire ecosystem on a daily basis, right? But if we all do what we do best, and it's on us, right? It's our responsibility to make sure that we're doing things the right way, then we will succeed, right? If you build it the right way, they will come. And so I think that's a very important. I needed to put that out there. To add on to a few other things you said, I love the cost savings is a huge thing. The efficiency, we're bringing efficiency in real estate as a whole, right? It's probably the backbone of 90% of the world's economy, maybe more, right? But it's also the most inefficient industry that there is out there. So we're bringing efficiency to the most inefficient marketplace through many different ways. And yes, cost savings is a huge factor. The automation of work processes and trackability and audit trail on those processes is what really the marketplace wants, right? They want to be able to see what they want, when they want, how they want, with as much detail as they please. Some people just want to stay on the surface. That's cool. But there's a lot of people that want to dive in and click through and see that detail. And, Invenium adds that piece of the data layer. Well, everyone else handles, what they handle best. And the investment minimum thing, that's huge. Yeah. Right. You change, two things in the institutional marketplace. One being investment minimum, and two, being that, ability, the biggest problem, right, with closed-end funds, right, today, like you need to make operational decisions based on, the call times, right, based on the expirations, based on whatever the case may be. Tokenization can open that up, right, so that you're not making an operational decision based on a deadline. And I think that's another huge opportunity in this tokenization space.
Yeah, just to wrap that up, and perhaps Brian wants to get into, so I don't want to hog the whole spotlight here, but I think there's a term that I've heard from a couple of you in terms of this word efficiencies. And this is a word that is nice, but is, I think, a little bit jargony. And for somebody that doesn't fully know the industry, like that doesn't mean a whole lot to anybody. And so the way that I look at how we can, make a market more efficient, I think that it's really about standardizing the process that every firm uses in order to value an asset and in order to provide capital to an asset. So whether it's Invenium with all of the real estate valuation metrics that they do, right? Taking every property, every asset, and treating it the exact same way so that any lender, any financier, any acquirer, any issuer will treat it the exact same way, allows them to do it at scale in a way that you can't do in the traditional way, because right now everyone has their own process for that specific event, which is so important in terms of valuations, for example. Or you look at institutionally, a lot of these larger banks and underwriters, they build what are kind of essentially broker co-syndication networks. These are just, they build little consortiums where they all share in liquidity with each other, whether it's bank to bank liquidity, whether it's co-syndicating a deal together, underwriting deals together. And so if all of these different banks and all these different financial services providers all kind of can agree on what steps they need to take in order to bring that deal to the finish line, they could be doing totally different deals in totally different industries with totally different players and providers and services in between. But if we're all treating it the same way, then when you bring that product to market, everyone else in the marketplace, in the ecosystem, knows exactly how to handle it, knows exactly how to treat that. And so what we see in traditional finance is that a lot of that doesn't happen. And so with each deal, every new person that wants to examine it, every new person that wants to take a position, wants to buy or sell or do anything, has to go through that whole process again to check the work of all the other people that have already worked on the deal, as opposed to creating standardization and rules and then tracking the audit trail so that you could very easily check and make sure that the steps were followed. And it's all kind of in the same language, if you will, so you don't have one person dealing in Spanish, one person in French, and one person in English. We're all using the same language to communicate the financial processes, which very much speeds up the process. It very much reduces the manual overhead, the back office processes. And to everyone's point here on the panel, you can automate a lot of things with programs because we're confident in the information. We're confident in the steps that we took to get to where we are today. And so that's when we talk about efficiencies, that's really what we're talking about. It's just getting everyone on the same page, whether they're around the globe, whether they're in the same backyard, whether they're working on the same deals or totally different industries. If we're all kind of aligned on what steps need to happen, how they need to happen, and what form those things take, we can have a much more efficient system.
And that's why Kyle's so good at what he does, because he takes our words and he makes sure that everyone can understand what we're talking about. So thank you,
guys.
Kyle.
Bring the expertise. I'm just here to summarize. That's all.
De-jargonify. I think it's very important. I want to take it to Bob as well, but I want to add another layer. We're talking about standardization and efficiency and throwing a lot of jargon around. Wendi mentioned instant settlement. Now, for some people might not know how the stock market works behind the scenes, but when you buy a stock, you don't really get ownership of that stock immediately, you think you do. There's a whole back office settlement process that could take up to 2 days. And recently, INX announced that we're going to be listing Greenbuy Capital, which is a publicly listed company on our ATS as a token. So I want to kind of take it to Bob, but add that extra element of tokenized public securities and what's your take on the efficiency, standardization, cost saving that can come from tokenization.
Yeah, before I talk about Greenbrier, I wouldn't, my background is in traditional finance. I was at a very large interdealer broker for 10 years and on the institutional foreign exchange side of the business. And there's a protocol called the FIX protocol, the Financial Information Exchange Protocol. It's basically a language with which liquidity providers and platforms can communicate with each other, and it's extremely widespread use across the traditional financial markets. And this is one example of something that just becomes ubiquitous over time and really facilitates successful business between counterparties and kind of like a backbone of the entire financial market. It's like HTML when you talk about the World Wide Web. And these traditional financial institutions have seen these amazing, technological advancements, and they continue to experience them, right? so the question could be, well, wouldn't they just adopt this next stage? I think there's just a natural timeline of things, right? When you look at these very disparate organizations and structures, and remember, you have individuals at the heads of these groups and departments and teams within all of these financial organizations. So, how do you steer everyone in the same direction when everyone's an individual who's got their own experiences and might be extremely happy with the way things are going, and they're doing well in their business unit. So why rock the boat? So there's just that natural, I think, ebb and flow, of technological adoption, whether it's super groundbreaking or whether it's, cost saving or whatever else. There is potentially only how much it can, the speed at which it can move. And you take traditional financial institutions, that's one level. You go to a regulator within the government, that's a whole different snail pace, right? Compared to those guys, right? So, it's just that I think there should be an acceptance of there is just how much time this is going to take. But to Samuel's point, we can't sit back and wait for that to happen. We need to push. We need to keep setting these precedents and setting these new, showing what can be done. And right, so with the Greenbrier example, that's a perfect case of here's a company that has its shares listed on a public exchange in Canada, and a specific shareholder is able to say, I want to tokenize my shares or some of my shares and list those on an ATS. And that's a direct solution for unlocking liquidity. That's how you access liquidity that's outside of that customer base of that public exchange in Canada. Well, let's look at other public exchanges elsewhere. For example, the INX, our shares trade on the now CBOE NEO markets, but we're also traded on OTC in the US, right? So that's one way of saying, well, let's look at ways of making our equity, more accessible and unlocking more liquidity. Well, tokenized stocks, tokenized shares is the new kid on the block, right? And so what we were successfully able to do there is basically run through the process. And it isn't just a case of Greenbrier knocking on the door to INX and saying, we want to do this. There is transfer agents and trust type structures that have to be, behind the scenes. The exchange itself has to be in the loop, right? So it was really exciting, really interesting. And we think this is going to open up doors to many more public companies that would look at this and say, why not? Why not take portions of the shares that are owned by various shareholders and make them tradable on a tokenized exchange, on an ATS, like INX is, or potentially other ATSs that exist. If you look at the business of depository receipts, it isn't wildly different from that. It's simply how do we work around the regulatory differences potentially between these various platforms and just make one asset tradable, put a wrapper around it and just make it tradable to a different investor base. So, on INX, you could argue there might be more of the crypto native, digital native, investors sitting looking at our books, as opposed to those who are on the exchange, on the traditional exchange, on a brokerage account. It's just another way of opening up new markets.
If I could just say one thing, and then I know Brian hasn't spoken yet, so we need to hear from Brian. But Bob, you said that there's a group that says why change it because it's working, right? I'd love to talk to those people because it's like the easiest sell that you can ever make, right? You used to have to walk outside in Manhattan and raise your hand and flag a taxi cab, and then this amazing technology came out called Uber. And everyone said, "Oh, that's never going to work. They're going to fail." And it's all Uber did was make the process more efficient, right? It's the same as Amazon, right? You used to have to search on the web, or before, go to 15 different stores, right? Then you could go on to each website of that retailer, and then you could just go to Amazon, and in your hand with a click of a button, you could get what you want, when you want, how you want it. Right? That's what this whole world is. We're literally not changing the game is still the same. We're changing the process in which an investor or an institution handles their process.
Yep. Mm-hmm.
That's it, right? We're just getting from point A to point B in a more efficient, automated, faster. But, oh yeah, by the way, an audit trail every step of the way. So you know who's touching it, who's doing what, and who's providing the information that you're making a decision on.
And what responsibility that party has that's blazing the trail, right? You know, because you get it wrong and you give all the naysayers ammo to say, well, I told you so, you know, this is before its time, or this or that. So we have a huge responsibility.
So to that point, and to both of your points, and bringing it all together, right? So there are existing principles to operate under. There are existing principles for how we implement, for fiduciary responsibility, for foundational governance, for how we implement this technology for the platforms that we are all trying, and this economy that we're trying to build, right? So if we can all, with this foundational governance, use this technology as the underpinning for these traditional assets, right? We can improve the entire thing. And it was Kyle, standardization, right? If you can standardize it and make it familiar and bring comfort, like, right? So if you can have confidence in the technology instead of fear of the technology, which is currently part of the concern, we can bring the proper principles along with all of these advantages that we've talked about and standardize it so that people can have comfort with it. We're going to bring the adoption, and we're going to bring all of these benefits. These, you mentioned it again, the speed. If you can take securities and instead of settling them in 2 days, I mean, the SEC's just come out with, they're going to be able to, next year, they're going to take it down to 1 day. There's still a day of exposure. There's back office. Breaks, there's risk. And here we have a technology that's going to change everything, because you're going to eliminate the entire break system. You're going to have, the speed. And then once we have adoption, because of standardization, where everything can get tied together and you can employ all of the principles, it's just a phenomenal technology. It is better than Uber. Sam?
I want to take it to Brian's fun and much anticipated, but I want to kind of ask you to give a little twist on it. We're throwing out a lot of ideas that can benefit the banks and the institutions and the hedge funds. But what about the community? Like you've been around the Web3 space in other verticals as well. Do you see some of that cross-pollinating into the tokenization space? Ideas such as tokenomics and staking and community building? Or is it just an institutional play, with efficiency, standardization, and all of that?
Well, the way that I'm looking at it, I've been soaking up everybody's thoughts and opinions, and everybody's correct. Isn't that the funny thing? When you're in the infancy of something, everybody's making points as to where things should be, and hopefully they do go. But from my aspect, it's building companies and investing in companies that I believe will create value for the end holder and also all the stakeholders that are involved in that entity. I was young, but I was negatively affected in the bubble burst in '99. I went through the banking crisis in 2008. So from my aspect, there's always going to be an issue. There's always going to be some problem you got to overcome. And there's always going to be the powers that be are trying to control where they want their money to go and grow. And how do you play properly in that environment? So for what we do is yes, a ton of value and wealth is transferring in the crypto world, and it's growing, and it's an amazing industry, and it's in its infancy. But my mindset is I want the person that's buying Berkshire Hathaway Class A stock. I want the person that understands yield. I want the person that understands wealth preservation and wealth enhancement. From my experiences and where I play, that money's still on the sidelines in this environment. And that's why it's crucial to the people like INX and vetting security token offerings and utilizing Kyle's company to get that proper messaging across the board. And unfortunately, the entities that go through this process, we need 100% of them to succeed, because that's going to allow trust and confidence into that movement. Samuel, when you're tokenizing real estate, whether it's hotels, real estate developments, a building, you want a Class A building that's going to spin off profits. You want no disruption in the earnings potential, and you want to showcase that success so Kyle can promote the hell out of it on his network. And now you start to bring in wealth, people that understand, oh, this is no different than what I'm doing traditionally. It's just another medium in where my money and assets can play and grow. And what Wendy's doing in her bank and understanding digitalization of assets and how to properly get those assets bankable, crucial. And in the U.S. environment, very difficult to do. Thankfully, you're in a state that's very friendly with this, and you have support from legislature, which allows you to progress in what you're trying to accomplish. And Sam, you brought up Uber. I was involved with Uber early on. If you were an Uber investor at that IPO, it is a failure. You're down $5 from the IPO price holding that piece of crap stock, but it created a ton of value for drivers. It created economies. It helped restaurants grow. It helped restaurants stay in business during a global shutdown by bringing food from the refrigerators to the stoves to the person's home to eat. So there is businesses that can be built upon business models like Uber, which they'll figure it out. That thing will be a home run at some point, but they still don't know how to make money with that company and how to properly grow it. But people build businesses off of it, which is what INX can do. People can build businesses and fund ideas and gain access to capital that they never had ability to have put money into before. So the world is amazing what's happening right now, but we need the projects to be vetted. We need analysts to come on board and start talking about these projects and giving them support. We need credit ratings of some capacity on these projects so they have real value that relate to bonds and relate to things that massive wealth are used to. Once that happens, we take over. But we can't have crap projects going through this system or it's going to fail.
I mean, that point that Brian you just made about Uber is absolutely spectacular, right? I mean, without Uber, there wouldn't have been DoorDash. There wouldn't have been all of these other delivery dudes in the South. There's all these other groups that really have taken this concept of getting a transportation, handling logistics in your hand, right? And logistics then businesses were built on that backbone platform of a car, a wealth of supply in drivers could not only take you from point A to point B, but they could take anything you want from point A to point B, which increased the fact that restaurants didn't have to take on the insurance or liability of delivery services, and it wouldn't interrupt their day or their activity or their revenue. In fact, it would just increase. It's a different line of revenue for those businesses. So you're absolutely right in that is what technology is, right? It is a breeding ground for innovation. And when you say no one can fail in this ecosystem, I'll push back a little bit. There's no such thing as nobody's going to fail. I actually think that, what's happening now is that it's sort of like a hot word to use, right? Like it used to be crypto. You said crypto and everyone tuned in, right? I'm here to tell you that like tokenization, there's a lot of people talking about it. There's very few people doing it. And people are throwing numbers out there, big numbers that Kyle will, back up on his, in his research reports that are verifiable data. I won't question Kyle that often. Gas needs a different thing. But what my point is that I think that, a majority of people who are out there right now talking about tokenization, who really aren't doing it, but they're talking about doing it, are going to fail. And you need to have failure because the strong will survive. The strong will survive. Those who have true technology, let me just finish this point. Those who have real technology and are doing it the right way, as long as we continue to talk about the right way to do this and don't use this, as a Ponzi scheme, right? This is not crypto. This actually is dollars. This is actual money, real money, not crypto. I'm not getting into that argument, but this is real transfer of wealth, real money, not cryptocurrency. I thank the crypto world because they set up the marketplace. They set up, the concept of transferring, ownership from point A to point B. Now we need to take that concept, not crypto, but take that concept and do it with real assets, with real data, with real, accountability and real auditability. And that's, to me, that's how this works.
I agree. And when I
I'm
say
not a fan of meme coins, I take it.
when I say nobody can fail, I really mean that, because one failure, let's just say through the INX model, media will be all over it. It'll be, and we all understand crypto, we understand tokens, we understand digital assets because we're in it, we live it. You got law writers here, you got people that breathe it 24/7. The majority of the world don't understand that. They don't understand the difference between a digital asset, a security token, and a crypto. So when you're speaking, Samuel, I get you, but they just think they don't get it. I don't know how else to say it. They just don't get it. So in order for them to get it, we need the projects that run through. Again, I'm using INX as we're on this great show, and they're one of my favorite people and partners. Those ones have to succeed strong, and they got to be promoted as to hell and back how successful they were, how much people's values increased, that they're sustainable. And the beauty of some of the projects that we're doing with them, like Turncoin, it's 100% gross revenue sharing on a monthly basis. And the investors know how the company's doing. They're part of all the earnings. They don't have to wait 3 months to hope that Joe Schmo running the company did a good job. And if they didn't, their stock portfolio collapses and everybody's rushing to sell. You're going to see so much more healthier investment and flowing in and out of capital. You're not going to see crazy drops and spikes with this type of movement and with this type of transparency. You're actually part of it. And like David, you're saying, the community is part of these projects because they're part of the earnings, they're part of the promoting. They actually feel old school ownership into something. Like they have a say, they have a voice, they get to promote it on their Twitter, they're involved in Discord discussions about it. There's a great energy and vibe there. But if they turn on you, you're dead. Your traditional business is dead, and your going forward Web 3.0 business is dead.
But if they turn on you, and if they don't succeed, I think it's important to know why. Because you just made a great point. People aren't going to run to sell, and aren't going to run to withdraw, and aren't going to run for redemptions if the transparency is there. FTX could have gone a much different way if there was any transparency, if there was any data. Now, it's a bad example, but it's also a good example. The failure of FTX brought out the concept of you need accountability, you need transparency. You can't just cook the books and put them away and say, we're not telling anyone anything. You need to do due diligence. You need to do your homework. This is not any different than any other investment vehicle, except I believe that it has answered a lot of the things we've learned from failures in the past. Yeah. And so I'm going to agree to disagree with you on no one can fail.
FTX is crypto. So you're proving my point that there's confusion in the market.
Yes.
And your example is a crypto example.
This is great, but guys, let's talk about tokenization, not crypto.
Yeah, so I'd like to get to what I think Brian made phenomenal points, and it's crucial. So we are suffering from a few FOMO, hurry up and build it, and never mind any responsibility and fiduciary responsibility, foundational governance, and that hurt confidence in the technology. And I think that there's a lot of focus now, right, on tokenization of real world assets. And when you say no failure, because we want to bring confidence to this market, we want to show them that the technology is beneficial, and it's the technology and its advantages that are going to bring it forward. And if it's done, as you say, as a success with fiduciary responsibility, with that foundational governance, with keeping in mind all of those principles that are required when you implement all of these technologies, and to Kyle's point earlier, have all the pieces together. You can't just have one piece. We've got to work together and ensure that you've got the proper banking, you've got compliance, you've got all the regulatory pieces that you need, the technology, the cybersecurity, all of the different connectivity, right? Custody, there's so many different pieces and they need to be implemented and they need to be done safely and it needs to be a success and you need to be able to have confidence in it to bring it. Brian, I think great points.
You know, Kyle can say it better than anyone. I start almost every one of my panels, podcasts, webinars saying that tokenization is not crypto. I usually don't even I call it the C word. I never use it. I was using it more to make a point. And again, I don't think we're selling technology. I think, you know, for the last 2 years, I've been talking about, running around the world, educating people on blockchain and real estate and, you know, the eventual adopt tokenization and yada, yada, yada. We're not selling a technology just like Uber didn't sell a technology. You were subscribing to a technology, but what you were really buying into by downloading the app and using was a change in your life, a change in how you did a process. You really weren't saying, I need to understand the behind the scenes of how this technology works. What we're really talking about here is a better way to do a process that someone is currently doing on a daily basis. That is really what it is. If we go down the rabbit hole of trying to explain technology, we're going to have a really long road ahead of us.
I agree with that. I think that from my perspective, really what we're all highlighting in different ways is also a significant danger and risk factor of illiquid assets and what that means on a company's balance sheet. Whether you're talking about Silicon Valley Bank that has very illiquid treasuries, whether you're talking about a crypto platform that has very illiquid assets and balances, whether you're talking about a commercial real estate firm that has a very illiquid portfolio of assets, it can be very, very difficult to manage that risk. And no matter what type of business that you have, without the proper processes to facilitate fractionalization and the enforcement of enhanced liquidity by building upon these efficiencies, by accessing new investor networks, by providing more confidence in the underlying valuations, that's really where the difference is. To Sam's point, nobody cares about the underlying actual consensus mechanisms and mechanics behind the blockchain. Nobody even probably really cares what your valuation models look like. At least nobody from the end user, from the buy side. What they do care about is what's the price that they're getting something for, how are they getting access to it, who's able to do that. To Brian's point, like the IPO market's busted. We see how every tech company goes to the IPO market and dumps. We see all these SPACs that have been a failure. Why? Because these are illiquid assets that get pumped up with a crazy valuation and then hit the secondary market, in my opinion, way too late. So when we're talking about fractionalization, when we're talking about tokenization, we're creating more confidence in these markets and building more efficient processes so that we don't have to wait until that extra step, till the 11th hour to bring these products to a public market and build that liquidity stack. We can do it much earlier in the process, which allows early investors in Uber to get better access, better materials. They can potentially liquidate pieces of their position. But even from a transparency aspect, even from a public markets access perspective, I think that the current capital stack and the timeline for companies to come to the public market and to be accepted by the international global system is very flawed because there's so many moving parts. Everybody needs to get on the same page. It becomes such a compliance headache that you just end up kicking the can down the road. And that's where you get a company like Stripe that raises a Series G at a $95 billion valuation, which is absurd. Like you look at Amazon, we used Amazon earlier as an example. They IPO'd at like $500 million valuation back when they IPO'd in the late 90s. And now if you don't even hit unicorn status in today's market, you're not even a successful startup yet. And so that's where there's a lot of issue, I think, is public markets are not seeing the same quality of deals, even if it's the same company. It's a different quality of deal when the valuation is 20x what it used to be, 15, 20 years ago. And I think that is another piece of the capital markets that the blockchain components, a lot of these trust and valuation changes actually bring to the table, which is just more fair for a larger base of investors, whether that's the individual retail investor or even a small capital allocation firm that doesn't have the access that some of the largest underwriters, some of the largest private equity funds, some of the largest venture capital funds have. It's not effective, whether it's from just looking at the performance on secondary markets, whether you look at the performance of these ultra mega large venture capital funds that invest these late stage rounds, they're also not performing at the same yields, rates, and returns that smaller funds are at earlier stage businesses. Every metric points to this is an unsustainable system and doesn't actually benefit anyone.
Okay,
Yeah,
so we're actually nearing the end of our time, so I kind of want to give you guys, Samuel, you can take off exactly where you left off with your thoughts, but kind of give you guys a few moments to give your closing thoughts. Where can we follow you guys? What can people expect? What are you guys talking about online? And what's the next step? How do you guys see the future? Just if you can summarize it in a nutshell, that would be great.
Yeah, I was just going to say, Kyle teed up as he always does. It's a great transition. I didn't realize we were at the end. But the biggest thing that we really haven't even talked about is what tokenization really does is it opens up the marketplace, right? If you live in Idaho, it gives you the opportunity to invest in a high rise in Manhattan. And if you live in Manhattan, you can invest in a SFR deal in Idaho. The days of, you have a single family, built for BTR community, you call Blackstone and you hope that they buy it or they at least set the market for it, right? Tokens are coming, listen, they're always going to be there. I don't want to disrespect Blackstone, ever. They're geniuses. Anyways, what it does is it changes the mentality of that sponsor in that there's multiple facilities eventually that can go to recap. I'm a firm believer that the easiest way to prove tokenization is from a recap standpoint right now. I think it's the best way to do it. I think currently eventually I think it could replace, your 4% Fannie Freddie agency debt. I think it's a beautiful place to be if you're a large investor to buy this as the bond of your portfolio on a recap basis and hold the note on multifamily real estate. But at the end of the day, we've established all of the pain points that this is solving, and to me, that's the biggest value out there with combining blockchain and private market assets is that it's transparent, it's efficient / standardized, as Kyle pointed out, and you as an investor, can literally see what you want, when you want, how you want it, and that will change. That the people who haven't adopted it yet, that's what they're fighting, right? Because if you have to prove why you're taking 12 and 2, it could get a little scary for some people. So my point is that this is where blockchain tokenization, this is the future, because there's no more transparent, verified, credentialed way of seeing the underlying data, underlying documentation of your investment in a real-time basis than this ecosystem and what we can provide. As far as following me in Venium.io, or just ask Kyle.
So I think we are at the very early stages of this industry. So we're building, right? It is going on in the background at the big banks. It is going on in the development stages. And what we haven't seen yet and what is coming is further development, further innovation, where we integrate all the pieces. And very, very importantly, we bring confidence and familiarity with the user experience. So you know that you're getting all the reporting that you're accustomed to. You know what you're investing in, and you've got validation, verification, and as Kyle mentioned, standardization. And as we bring all of those pieces together, the digitization of real world assets, the tokenization it's an enormous field. So it's going to come first, right? As we're seeing process through fixed income, treasuries, et cetera, assorted other fixed income assets, through securities, which we are in the very early days, and it's going to become the preferred format. At some point, the technology is so much better than what we see right now. But it's there for healthcare. It's there for real estate, of course, which is clear. Payments, it is coming across logistics, and it's coming for commodities. It's coming for supply chain, provenance. It's got so many features. It's coming, but we are waiting for all those pieces to be able to integrate, and we are waiting for the user experience, which brings familiarity, right? And it's coming soon. And there will become acceptance and then adoption, and it will be gigantic.
Well said, Wendi.
Agreed. I think, I mean, this has been incredible, this panel, right? You know, it's clear, you know, we all feel the same way. This is coming, you know. I think you look at, you know, the market also loves a narrative. You know, there was always the latest crypto blockchain, you know, trend, you know, that lasted, you know, a while, and then it faded, and then something else came up over the last couple of years. And if you think back to where institutional players got involved and said, you know, this one is the asset class, you know, I mean, you've seen obviously the ETF approach, you know, attempts, but, you know, it's really at the tokenization stage of, you know, blockchain crypto's life cycle that we're starting to really see very clear engagement and very, you know, big names coming out and openly saying, you know, we are actively pursuing a strategy around tokenization or technology to do with that tokenization. And we see platforms and exchanges, networks coming up, like the Canton network that was announced a couple of weeks ago. I mean, capital formation, you know, has always been daunting. You know, raising capital, especially since SVB's collapse, you know, has changed again. You know, it continues to evolve. Here we are offering a whole new avenue to raising capital. We're opening up this entire new investor base, the retail investor. We know it very well because we accessed, you know, 7,200 investors across 64 countries. And that's huge. And that's what we really want to bring to all of the clients that are coming to us and saying, we want to raise capital. We want them to be able to have the same kind of success. So it's definitely early days, like you say, but there is very clear, you know, structure, technology, framework in place that we can use to start pushing this. So yeah, I welcome anyone to reach out to me via LinkedIn to discuss tokenization opportunities for your business or for your portfolios.
Bob, let's run it back. Let's do round two. Tokenization is not crypto.
Yes.
Or tokenization versus crypto. I would love to get like a. They're always a bit more exciting. We had one of Bitcoin maxis versus the ordinals crew, and it was spicy.
I think you know, like I feel when we do these types of webinars, it's really clear that we could achieve a lot more as well when us industry players in this space actually collaborate closer and come together and you know, review our pain points and offer up opportunities. So we definitely need to you know, to continue to do this, you know, continue to lead from the front. As we have been doing.
Other than that, I want to shout out Tony and Harish, Alex, Karen, many of the people that have left comments and good feedback throughout this conversation. I think Tony hit the nail on the head that we're still waiting on the exact, I think, Bitcoin moment in this industry. I use that term a lot of like nobody cared about crypto at all until Bitcoin succeeded very well. People need to make money if you're going to attract retail people. And so we haven't yet seen a lot of that performance that has driven any significant retail interest. So working towards that, I think, makes a lot of sense. And there's certainly, I think, applications that work very well, but none that have yet been, I think, strong enough to really permeate or capture the mainstream attention. And so we're working through that now. But places like INX are going to be the best way to stay up to date on this stuff because there's awesome brokers, there's people that are bringing really cool projects to market. You just need to stay on top of it and find things that you really like. Certainly do your own research and you know, value these things appropriately. Find the things that you're interested in and share and give feedback. The best way that we can drive adoption of this stuff is for everyone to participate. So anybody that's tuned in, thank you so much. You're on the forefront of this and you help us power everything. You want to get in touch with me, just follow me there, and we'll chat. I'd love to say what's up.
Brian, do you have anything to say before we lock it down?
No, this was an awesome discussion. Thank you all. So I'm looking forward to what the future brings. It's only the beginning. So like Kyle mentioned, anybody that's even thinking about security tokens and where they maybe want to putting their hard-earned taxed earnings, it's a great place to feel comfortable and safe knowing that it's protected to the best of its abilities in the current market and regulation. And have backups to the backups to the backups to the backups. We're in a world where you never know what's going to collapse or fail. My experience and history is I got hundreds of banking partners around the world on a moment's notice, just in the event that whatever we're working on, there's an issue. It's a scary world, but it's an exciting world. Don't focus on the noise and chaos or create fear. Be smart where you put your money, research, do your due diligence. And thankfully, because of INX and the projects that they're bringing to the market, you should feel a lot more comfortable knowing that every proper procedure has been in place to bring that investment to the market for you. So be smart and good luck. And you can reach me, Brian J. Esposito, on LinkedIn and Twitter, and I get back to everybody and appreciate everybody's time today.
Thank you, guys. I just want to answer Tony because he asked a really good question. He's like, what is the killer app of tokenization? And, my personal belief, yield generating assets. So tokenized treasuries are very hot right now because anyone with some stable coin wants to put it in like a secured investment that can earn them some yield. But I think in order for it to really capture the mainstream, in order for it to really penetrate, it needs memeability, it needs some sort of cultural virus aspect to it, that it can become more than just a company, more than just a business proposition. People need to, Bitcoin is not just an asset, or it becomes a meme, a culture, a living movement at a certain level. So I think, any security token, any tokenized asset that wants to penetrate into masses, there's a lot that we can learn from crypto, and I'll leave it at that. The community building aspects, how to build tokenomics, how to build, how to build excitement and hype, and that's maybe something we can do on our part too. Samuel, as you mentioned, tokenization is not crypto, but for now we'll leave you at that. The recording will be out. There will be a YouTube link. We'll cut up some slices to share on social. But you guys have been incredible. I've learned so much from each and every one of you. And enjoy the rest of your day. Thank you for joining us.
Thanks, everyone.
Thank you.
Take care, guys.
Thank you. Ciao.